Given the overall markets, here's our thesis. The recovery of the housing market here is a greater counterweight to all those problems over there, wherever there, North Korea, Europe, you name it, may be. Jack Ablin, BMO Private Bank Chief Investment Officer, and David Kudla, Mainstay Capital Management CEO, are both joining us. Now, let's dig into this, Jack. What do you make of our thesis? Housing is more important to the economy and the U.S. stock market than those problems. True or false?
Yeah, I think that's true. I think it's an extension of what's going on in manufacturing, too. The fact is that we have a cheap housing market, we have a cheap currency, and the growth in values is certainly helping sentiment, household sentiment, and it's also prompting a lot of foreign buyers.
You know, though, Jack, if you had to weigh it from a numerical perspective, because as I've said many times, theoretically, a stock is just supposed to be the future value of earnings, right? So will the recovery in the housing market drive GDP, the economy, and corporate earnings enough to mitigate slowdowns for big caps in places like Europe?
That's going to be tough to tell. I think, you know, one of the concerns I've had, Brian, is for the last 3 consecutive years, we've been growing at a lower rate. And this is an area we really should be reaccelerating, not decelerating. So that is a concern. And a lot of it is the headwinds coming from Europe and even emerging, where we thought there'd be a lot more growth going on.
David Kudla, what do you think, right? Motorhead saying the only card I need is the ace of spades. Perhaps that is housing. Is housing great enough to overcome all these other worries?
I think housing is an important factor. If you look at the growth we've had in housing, we're looking at 1 to 1.5% growth in GDP attributed just to the housing cycle as it continues to grow in this secular bull market we're in for housing stocks. And if you combine that with what's happening in the automotive industry, we have auto sales on the rise, we have housing on the rise. We can look at Europe in 2 ways, as I see it. One, there is the problem that Europe is a drag on global growth. But also, when you look at the problems in Cyprus, the problems in Europe, I think investors there are looking at the U.S. as maybe a better place to put their money. So, talk about in terms of the economy, Europe is going to be a drag, but we've got a lot of good things going here with housing and autos. And if you're talking about money coming into the capital markets, the U.S. market is far more attractive than most markets around the world, with the exception of maybe Japan.
Agreed,
recently.
and it certainly has been, David. However, with the run-up, right, which has extended valuations a little bit, it's been a bit of a multiple expansion, not much. But every time we go higher on the Dow, doesn't the Dow look, therefore, less attractive?
It looks more, we're getting closer to fairly valued. You know, we're not stretched on a price to earnings multiple. And the question is, where else do you put your money? Where else do you go? So stocks remain the most attractive asset class. We are not stretched on valuations. And if you look around the world, you look at other asset classes, stocks remain one of the most attractive, U.S. stocks specifically, and Japan.
Can I add to that? I think that's the bottom line, is that it's kind of the most attractive place to be in an uncertain world. I think that fair value in the S&P is probably 1520, not 1560, and I think that what's driving stocks and will likely drive stocks higher is the relative attractiveness of stocks to bonds. I mean, the fact that defensive sectors are leading this market higher suggests to me that there are a lot of reluctant equity buyers that would probably prefer to own bonds, but can't because there's no yield, there's no growth opportunity, so they're tiptoeing into the market with, consumer staples, with utilities, with healthcare. And I think that it's this prodding that's going on with quantitative easing that's pushing stocks higher. And the question is, how long is it going to be like that? When's the Fed going to reverse course?
I promised our viewers some actionable ideas. So before I let each of you go, Jack, quickly give us 1 or 2 places you're advising your clients to put their new money right now.
I would say still here, U.S. financials, probably a good place to be. If you want to own international, hedge the currency back to the U.S. dollar.
Thank you. And David, to you, some ideas for our investing public.
We like housing, like financials, and we like Japan, hedged for the currency.
And we're throwing up some ideas. Eagle Materials, one specific name, and an Alarian MLP, Master Limited Partnership. Those are names that you do like.
Yes. Eagle Materials.
Go ahead.
Eagle Materials, we're moving back to supply chain and housing. A lot of housing stocks have become overvalued. This is a building supplier. The JP Morgan Alerian MLP Index, energy, MLP. We don't have the volatility of energy prices, more the commodities moving around the country. Gives us a dividend yield and a nice income stream with nice returns.
Jack and David, both gentlemen, thank you very much. We'll see you soon.
Thank you.